Good morning out there, traders. It is December 26, 2023, and welcome to the Apteros Daily Market Insight for the ES. As usual, we're going to start with our recap, and then we will update our levels for today. So taking a look at our last DMI, which is actually on the 22nd, it was kind of an interesting session because we essentially had a bullish bias on the session, but we were waiting on a pullback as well. So what we had was a line in the sand down in this area here, and we were looking at scenario one, which was kind of remaining bullish up above that zone. But in the morning, we were coming into neutral references and target zones, and I had mentioned in the DMI that if we can't get above those areas, a pullback is going to be likely heading back into our line in the sand. So in this kind of situation, we had an opportunity kind of early in the session to kind of scalp our way along to the upside here into this first neutral reference. But then once we got there, it was kind of hands off on the bullish side of things until we started to see some lower inflections from this neutral 4808 zone. None of them really materialized in any kind of up move to continue to the upside. So it was more or less just kind of scalping along with these neutral references, along with our bias from our line in the sand in our main scenario, right? So from this whole section here, it was pretty much just taking little scalps and essentially waiting to see if you got a breakout or not, and it never really materialized. So of course the pullback gets put in. We come right into our line in the sand area, get a fantastic inflection, kind of heading into the end of the day there, and a move just straight up into our first target area. So our overall scenario and planning was spot on, but it took most of the day to materialize at this particular line in the sand, and that was really the whole entire breakdown of the session. It was kind of just waiting for sitting on your hands and waiting for a major pullback into the zone that you were looking for and trying to remain bullish along with scenario one. All right, so let me update our levels and we will take a look at what's going on today. Okay, so now taking a look at everything in the landscape for today, the ES is kind of in a little bit of a dissonant spot here. We have some time frames that are bullish, time frames that are bearish, and rotational. So we're kind of paying attention to the overall landscape here on our multiple time frame analysis. So let's start up above here because that's where the more recent time frames are, and that's where kind of the hinge on the market's going to be, especially early on in the session. So our upper line in the sand here is bearish in nature, and it's going to be really important for that to clear out. You're going to have to see the market break out above that for any further continuation to the upside. Now, currently, it's accepted to the downside. So in other words, kind of in this zone here, staying below that is the current line in the sands what is picture. So the expectation here is that we're going to push down possibly into that first neutral reference, then maybe get a continuation down to the bullish zone here, possibly looking to kind of run through those little lows there, and that's where you'd expect maybe an inflection for the bullish side of things. So breaking down the overall picture into different scenarios, what we have here is an upper line in the sand that's bearish in nature. So scenario one is going to be holding below it. Scenario two is going to be a push up above it, heading into that 48-44 target area. So that's the general layout of what we're looking for out of the upper line in the sand. So currently looking at scenario one, push down into here, possible continuation down into our bullish zone. Scenario two, break above, heading straight up into that 48-44 zone would be the expectation on that line in the sand there. Now, take a look at the lower edge. This is still where the major trend is in this market. So the bullish side of things is still a little bit more important for us. The reason why that this line in the sand is bearish and even here in the first place is because we do have to clear it out for any upside to really look good in the ES for our daily market insight. So coming back down to this lower line in the sand here, if we do get the pullback, probably looking for a run below these little low areas here and then an inflection coming back out, heading up in that 47.99 area, and then a continuation up into that upper line in the sand. And then if we do get the break to the upside, the 48-44s would be the overall destination there for scenario three. But the main, first piece of scenario three is definitely going to be a move to that 47.49, then this bear line in the sand area as well. So then taking a look at scenario four, that would be a full breakdown. So in other words, this bear area would hold. We continue to the downside. We come right through our line in the sand, and then we continue selling off into that 47.12-ish zone. And that would be the overall destination there for scenario four, which would be the full breakdown of the bearish or the full breakdown of the bullish side of things on the line in the sand there, but the bearish side of things taking over for today's session. So that is the breakdown of our multiple scenarios. And right now, The expectation is a little bit something like this, a little bit more rotational because of the dissonance. So it's one of those situations where you want to monitor the acceptance picture around these areas, because if they shift or change, that's going to be important information for us to go with that. So in other words, if we see scenarios 2 or 4, those will be important, kind of leaving behind of the values that we're kind of building between in this dissonant zone. All right. So trade well, mind your process, and have a great day.